Take a look at this. In 1987, this housing index was created, the Shiller index. It was created to track changes in home prices in the top 20 metropolitan areas in the United States. It is still one of the leading economic indicators used by economists. In 2000, this book, Irrational Exuberance, came out. It predicted a bubble in the stock market during the height of the dot-com boom. It turned out to be a prophecy. In 2005, an updated version was released predicting another bubble, this time in the housing market. It, too, turned out to be a prophecy. Skip ahead to 2012. This book is released arguing that the economy will not advance without the creation of new financial products. Sounds laughable. Sounds like a tough sell, particularly to a public which still blames the financial sector and financial innovation for the crisis of 2008. Is this book going to turn out to be a prophecy as well? Let's turn to the man behind it, Robert Shiller, economics professor at Yale University, the name behind the Case-Shiller index, the name behind the S&P Case-Shiller, the PE ratios. This is your new book. I can't believe it. You're telling us that we should innovate more in terms of finance.
I think that should be our response to Occupy Wall Street. They want to fix something, right?
Right.
Okay, it's like a car is broken, you bring in a mechanic. You got to bring in people who study finance. They're looking kind of bad now because people think it's just evil. It's not evil. It's something that can be fixed.
One of the things that you recommend, and the great thing about the book is you have very, very specific ideas, some of which seem attainable and some seem like pie in the sky. One of them, my producer refers to as a prenup for mortgages. Yeah. Tell me what you're talking about.
Well, right now we have over 11 million Americans who are underwater on their mortgage. The home price fell, their mortgage balance didn't fall. So they're ruined, right? And that's major part of our crisis. They don't spend when they're in that state. That didn't have to happen. We want to give them workouts now.
Right.
But we don't have an arrangement for that.
So the workout is generally seeing if the bank will make some kind of deal to cut the amount of money they're owed.
Well, ideally, that's what it would be.
Right.
But it's not happening very much.
Right.
And I think, well, if we want that to happen, the thing to think about now is let's plan for it now for the next time.
Which is why we think about it as a prenup. Let's give an example. If a husband and wife go into a bank, they want to buy a house, they go to apply for a mortgage, basically it's an insurance product that they would buy that says, in the event that you finish the sentence, how does it work?
Well, I think it might be tied both to home prices and to the economy, the unemployment rate. So if home prices fall, we will reduce your mortgage balance automatically to keep you in positive territory.
In fact, the whole concept of a mortgage was the idea that you're taking money from people who have lots of it and don't have enough places to put it or things to do with it, and giving it to people who can use it to find a house, because we'd all have to be 80 years old to buy a house, or most of us, if we didn't have this concept of mortgages.
Mortgages are really important. We don't reflect on that. Young people, when they have kids, that's when they want the house, but they don't have money saved up yet. So finance has improved our life. It used to be, you know, before we had mortgages, you had to live with your parents. And that wasn't so good. There were frictions. People now, they found it much better. Man and wife and the little kids and their own cute little house, that's the way to live.
Now, we tend to think that the idea that your bank would resell your mortgage so that they could get money and make loans to other people and resell it and bundle it, and that whole term is securitization of the mortgage, turning the mortgage into a security. I would say that if you ask 9 out of 10 people, if you explain securitization to them and ask them whether it was the cause of the financial crisis, they would probably think that it was. And yet, once again, in your book, you're saying securitization may be the answer to some of our problems.
Right. Securitization spreads the investment risk over the whole world, ultimately, and it makes mortgages more available. So, I mean, if people want, young couples would like a cute little house in this, wherever they want, or a nice condo somewhere, it's all made more available by these kinds of products.
So what went wrong? Why did that cause so many of the problems that we had?
Well, I think the real problem was an error in predicting home prices. People thought they could only go up, and so they constructed instruments that didn't take any account of the possibility of a decline. My colleagues and I, working with the Chicago Mercantile Exchange, started a futures market for single-family home prices in 10 U.S. cities in 2006. And it started warning of this debacle soon after we found it.
Right.
But no one paid it, you know, people, it's not really going well yet. we have to get, this is democratizing Wall Street.
Right.
This is bringing the risk management potential of Wall Street down to the home that we own. And once we do that, if we had done that, we would have eliminated the primary cause of this crisis.
Would you buy a house right now?
I would put it this way. If I were this couple with a young child, definitely. I don't know which way home prices are. With our S&P Shiller index, they're still going down, but they might. But I wouldn't buy a home as just a generic investment. If
right.
you know
you're going to live there,
or if you know something about the property, you could still invest in home. But just routinely buying a house as an investment, I don't think it's a great idea right now.
All right, stay right there. Stick around. You're no apologist for Wall Street's sins, but you say that financial capitalism is still the way forward. We're going to find out a little bit more about that when we come back. Stay with us.